All right, we just finished up most of the Fed talk from Jerome Powell, and I'm going to give you guys my thoughts. We were watching the 1 minute chart live, and it was a crazy chart. We went from, we started the meeting at about 112,000. We crashed all the way down, got extremely oversold here, all the way down to $109,400 before, guess what, by the end of the meeting, reclaiming the exact same level that we were already at. What is this? What is this? This is market makers using any excuse that they possibly can to steal liquidity, and that's exactly what happened again. But where are we when you zoom out just a little bit, and we can take a look at where is the market? What does this mean? And we'll talk about some of the bombshells that on paper caused the initial crash. Was the bombshell from Jerome Powell, where he said that the Fed has not made up their mind in December if they're going to cut or not. And this caused an immediate sharp rejection in the markets before it basically was much ado about nothing, which is what it always happens every single time, by the way. Every single time when we watch the Fed, there's a sharp move up, there's a sharp move down, and then 3 days later, it is a wash and none of it matters. And guess what will be happening again? 3 days from now, it's going to be a wash. None of it's going to matter, and we'll get the actual trend. And what is the actual trend? Well, here it is. We had a big move all the way down to the double black swan on October 10th. We filled out that lick and wick from that lick. Yeah, the lick is the proper term. The lick that the market makers got their lick in. We filled out that wick, and from that moment, we put in higher highs and higher lows. What I want to see from Bitcoin here is continuing to hold this as a higher low over here. If we do that, get back above the 200 on the 5-hour chart, that puts us back in bullish posture. Now, one thing that's quietly happening while this is happening is Bitcoin dominance has officially put in a lower low. Okay, this is what we've been waiting for. This is not. This candle was already being very strong before the Fed meeting took place, and this is a strong candle. As we can see, this is like more of a grueling down to this point where this is a big one, and right now we're hanging off on the 100 moving average, and when you go to one, most likely you fill out the second one, which is all the way down here at a macro lower low. And what we know from Bitcoin dominance is, my thesis is that I've been working on, this was Wyckoff distribution. Okay, and this took a long time to play out, and then we had a big crash and a dead cat bounce, and now we are starting to show more weakness again before we get sort of a continuation. So this is a very, very big deal that's taking place right now. And the other two major things that I have my eyes on is gold and the Russell 2000. Now, I've already made my case. On October 16th, I sold 40% of my gold because we were seeing things like this right here. Peak euphoria for gold. Peak absolute pandemonium euphoria for gold. I said on October 16th that I am selling 40% of my gold. We have not been higher for a second. Not a 1 second have we been higher on gold. And in fact, I have been shorting it all the way down very profitably, and I plan to do so very much so. So on the 5-hour, what do we got here? A big rejection here. The most overbought, that gold has been since 1979. And we found a little bit of support off of the 200, bouncing up to the 100, and perhaps getting rejected if we get a lower low. Again, this is going to plummet when we look on the daily. You can see the moving averages are way spread apart. We're probably going to test the 50 moving average way down here at 3750. The thing is, like, I don't expect gold to have a pin top, blow off top. However, it's so overbought, that wouldn't shock me either. But all we really need is a grueling down and a rotation of capital to continue to play out and to continue to rotate into the Russell 2000 and into Bitcoin. Now, the Russell 2000 holds the key to everything. The gold topping is a major, major, major inflection point. So what do we have here? We had the C19 crash, big spring, and we went into absolute parabolic euphoria. The most overbought that we were, was August of 2020. Guess what happened after August of 2020? We crashed back down to the prior range and we just chopped here. And then what happened during that time from April when it bottomed out until November when it absolutely bottomed out? You tell me what happened between April of 2021 and November of 2021. I'll leave it up to you. Well, we had the exact same thing. We had the spring event, which was the April tariffs, which I've said many times is the spring, and gold has went into absolute euphoria. The most overbought that it's been on the monthly chart since 1979. The most overbought it's been on the daily chart since August of 2020. Okay, and while this is happening, we have the exact same setup on the Russell 2000. Which, what is the Russell 2000? Why is that important? The Russell 2000 is an indication of risk on assets. Okay, risk on assets. This right here is the April tariff crash, and I've made the case structurally. This is doing the exact same thing. This is where I pulled this fractal from. Was from, what did we just talk about? The C19 crash into the gold top. So what happened here? This is the 2019 into the C19 crash, and then you go into absolute euphoria. What time? March of 2021 was when the Russell 2000 went into distribution. So that was the buying climax. The UTAD for the Russell 2000 was November of 2021. That is textbook Wyckoff distribution. That is literally from the text right here. Here we go. That is the text. Here is the text. So I pulled this fractal from here, and we are outlining it over here one more time. During this time, by the way, that was when things went euphoric. It wasn't until the Russell goes into distribution is when things went euphoric. So I pulled this fractal from here. This is lining up perfectly. Not only is it lining up perfectly, it's literally candle for candle, wick for wick. In fact, we had a major liquidation event during the exact same time. Okay, so when was this? This was October 10th was this major liquidation that took place. It was obviously way heavier in crypto, but it affected the Russell, it affected gold, it affected everything else as well. And if we zoom out, what do we see? Candle for candle. It is following it comically, hilariously. And what we would expect from the Russell 2000 would be another higher high followed by another lower low going into distribution while gold is topping out, while Bitcoin dominance has just put in a lower low. So when you look on the 1 minute time frame, when you look on Bitcoin on the 1 minute time frame, this is really scary when we're watching it live. And I know we live stream it as partly as a dramatic effect, and people start freaking out. People start literally capitulating. I start seeing you guys capitulating live. And then the hilarious thing is, it's all said and done. Guess what? The market makers have done their thing. They've grabbed their liquidity, and we're literally back at the same level since before we started. So what I want to see from Bitcoin on a serious note, on a higher time frame, I want to see the higher low hold. And where we wicked all the way back down. Guess where we wicked back down to, ladies and gentlemen, on the daily chart? The same thing that's been support since 2023. What is that? The 200 moving average over here. All the way back since 2023. We can see this dark blue line since March 10th of 2023. When Silicon Valley Bank went to zero, this dark blue line, which is the 200 EMA, has been support for Bitcoin. Every time. Every time we get there, it's scary. And then what happens? What just happened today, even with the Fed talking, we wicked perfectly to it and found it as support again. So what do I want to see? I want to see the 200 hold. I want to see a higher low be confirmed. I don't want to see, I'm going to start being concerned if we take out this low over here, 105, and I will definitely be concerned if we take out 103. If we take out 103, then, that would be more in line with a dead cat bounce and then putting in a lower low. That would make me concerned. But as it stands right now, we're on top of the 200. We're in bullish posture. The market makers have grabbed liquidity, which they always do. And another rule that I'm going to add to the trading challenge is don't trade the Fed. It's not a good idea. I knew it's not a good idea, but I still did it anyways. But that's beside the point. It's not a good idea to trade during the Fed because there's extra heightened volatility. And then when it's all said and done, 3 days later, it's much ado about nothing, and you get your actual trend. So what do I expect? I expect Bitcoin to find support off the 200. I expect gold to continue to roll its way over. I expect the Russell 2000 to continue to follow the same exact structure, and we'll see where that lands us. I am cautiously optimistic right now, and I think that Bitcoin in the short term, medium term, really, medium term, is going to get back to the top of the range, and we'll see what that does with Bitcoin dominance. We'll see what that does with the Russell. We'll see what that does with Bitcoin and the altcoins. But that is going to be it for this time. Make sure you guys like, subscribe, follow me on TikTok, YouTube, Instagram, Twitter, Twitch. I will never message you first. Peace, love, prosperity. God first. God bless.